Hello everyone, welcome to the ichimokocharts.com daily analysis for the S&P 500 for Wednesday, March the 16th, 2011. Well, a continuation of the trend to the downside today, and we saw the candle today making a lower high and a lower low, continuing that trend to the downside. The previous day's trading, we saw the market find decent support down around the 1265 region, and the buyers come back in quite solidly as the market tested just down below that area. That set the market up for a potential hanging man type bullish reversal pattern. But with all these reversal patterns, the important thing is to look for the higher high and higher low in this case, and we're on the alert for the market trading up above the high, which was roughly around 1288 of the previous candle, and that didn't happen. The market sold off quite solidly all day, so that potential candle is a reversal candle is now complete. There's no reversal there, and we need to disregard that. Today's market was quite bearish. We had a very large red body to this candle, and we completely blew away the support at 1265. The very large red body means that the sellers made some very, very strong net bearish progress on the day. Now, having said that, though, we do have somewhat of a shadow on the bottom of the candle, represents the sellers losing some commitment, but it's pretty much what you'd expect when you'd have an extreme day as we had today. The market was finding support down around this 1246 region, the previous area of resistance, and that area also coincides with the bottom of the cloud, as we can see here. And we know that anywhere within the cloud, especially around the top and the bottom regions, can act as an area of support or resistance, and that's probably why we've seen this small shadow on the bottom. Now, considering that, however, the buyers still did fail to take control of this market shot, so they didn't show any commitment, and they failed to take control, and we have a candle now with the sellers still in control. Having said that, though, there is still a possibility that we could have a change of trend, because the area around the candle usually holds as very solid support. So we do need to watch the high of the current candle, which is around 1280, 1281, looking for a higher high and a higher low. Reading the short-term dynamics, though, the what we're reading of the bulls and the bears, it doesn't look likely at this stage. Now, if the market does rally, then we will need to take out the 1265 area, which will now potentially act as an area of resistance for this market. We can see here we have good solid resistance up through this previous area of the congestion area, and that the high of that was around 1278, so we've got potential resistance up around there, which coincides roughly with where the top of the candle is, and some swing lows which acted as support. They will act as potential resistance. Certainly up around the 1295 to 1300 region will act as resistance, and that coincides with the top of the cloud. So now the cloud, if the market does rally, will act as an area of resistance. If we do keep trending to the downside, and that's what we would expect the market to do, because as technical analysts, we believe that the trend will continue unless we have evidence otherwise, and that evidence would be, in this case, a higher high and a higher low. If we do continue trend, then we have this support at 1246, and then support down to 1232, and that's quite a large region, a large zone of support all the way through there. So very good solid support, and that support extends all the way down through. We can see here where we had previous resistance and support down to 1219. So a very decent area of support down below. Now, if the market does break out to the downside below the cloud, then if we consider that the market will go on with that move, we do need to see quite a bearish candle. So if we do see that bearish candle, then we would consider that the market might be testing lower than the 1232 region, perhaps. Now, just looking back at the symmetrical triangle that we highlighted previously, we can see the previous uptrend and the breakout from the triangle. Our target has been met with that triangle. So the target is the width of the triangle projected down from the area of the breakout, and that was around 1254, and that target has been met. The market failed to close down below there, but tested down below there. Basically, for tomorrow's trading, we do need to watch the low of the current candle, and once again around 1249, 1250, and then certainly the area around the bottom of the cloud, and then also the area around 1246, which is just below the cloud, potential support area. To the upside, the high of the current candle around 1280, and then we have potential resistance offered at the Tenkan-sen and Kijun-sen, which are at 1290 and 1296, and in between that is the top of the cloud, so solid resistance overhead as well.